People are worried about some systemic problem. When stablecoin cracked several days ago.
Numbers are actually quite good. They did very well with wireless units. They did very well with broadband units.
This is the best time to find great deals in the stock market, with all three major indices down more than double digits in the current bear market. A bear market is regarded as a leading indicator of investor pessimism, and it comes with a significant and long-term market decline. It is defined as a period during which a stock or market index falls by 20% or more from its recent peak. Concerns about high inflation and increasing rates have thrown stocks into a nosedive in recent weeks and months. Fears that these factors will push the country into a recession have increased as well. Aside from inflation, Wall Street's view has been clouded by a variety of uncertainties. The prolonged conflict in Ukraine has pushed up commodity prices around the world, and new COVID restrictions in China have raised concerns about supply chain disruption. Because of these reasons, stocks have been crashing. But this doesn't have to be bad news. You can make money in this bear market by buying any of the stocks I will be mentioning in this video. Welcome to Flores Online Explains, the online education platform. Subscribe to my channel for information, explanations, and tips. Don't forget to press the like button and the notification bell. Now let's get into the video. The first stock we're going to look at today is the Verizon VZ stock. Despite the fact that the VZ stock has persistently underperformed the S&P 500, the telecommunications giant dividend generally attracts income-seeking investors. Also, if 5G cellular services spark profitability and revenue growth, Verizon stock might become much more appealing. Verizon is the largest wireless service provider in the United States. It also sells landline services to Northeast residents and commercial services worldwide. Verizon Communications VZ shares are down by 5% in 2022 due to stock market volatility. The telecom giant stock dropped after revealing first quarter profits and revealed first quarter profits and cut its full year forecast. However, VZ stock has recovered since hitting a 4-year low of 45.55 on May 2nd. As wireless rivalry heats up between AT&T and T-Mobile US, TMUS, Verizon may find itself in a difficult situation, according to Craig Moffett, an analyst at MoffettNathanson. Rather than seek market share, Verizon has opted to strengthen average monthly subscriber revenue. According to some analysts, Verizon may benefit from AT&T's pricing hike in May. Also, Verizon stock spent $53 billion in a government auction, including incentive payments to satellite operators and clearing costs. Verizon is also expected to benefit greatly from the shift to 5G networks, which will significantly enhance upload and download speeds. It has the most spectrum in the sub-5 GHz range, where 5G will be implemented first, and it is the market leader in the millimeter wave spectrum, which is where the industry will eventually end up. It's also using its wireless fixed capabilities to extend its home internet offerings. It attracted 112,000 new customers in the first quarter of the year, which was 2.5 times more than the previous quarter. All these are very good signs for Verizon, so this might be a good time to buy the stock. The next stock we're going to be looking at is TSCO. According to Zacks' exclusive analysis of the stock, Tractor Supply Company is now rated at Zacks Rank 2 stock, and they also predict that the TSCO stock will outperform the market over the next several months. While cash is a lifeblood of any company, for development-oriented businesses, higher than average cash flow growth is more necessary and profitable than for mature businesses. This is because increased cash flow allows these enterprises to develop without having to rely on costly outside financing. Tractor Supply currently has a year-over-year cash flow growth rate of 23.8%, which is higher than many of its competitors. In fact, it compares favorably to the industry average of 17%. While investors should focus on the current cash flow increase, it's also important to evaluate the historical rate to put the present figure into context. Over the last 3 to 5 years, the company's annualized cash flow growth rate has been 16.9% compared to the industry average of 13.5%. Tractor Supply not only has a growth score of A based on a variety of metrics, but it also has a Zacks Rank number 2 due to positive earnings estimate revisions. Tractor Supply is a potential outperformer and a good choice for growth investors based on its combination. Next stock on the list is United Parcel Services, or UPS. According to Zacks proprietary data, United Parcel Services Inc. is presently rated a Zacks Rank 3 stock, and they expect UPS shares to trade in line with the market over the next several months. Furthermore, United Parcel Services Inc. has a VGM score. The VGM score is a weighted average of the individual style scores, which allow you to focus on the stocks that best fit your personal trading style. United Parcel Services Inc. may be undervalued according to valuation criteria, and it has a value score, indicating that value investors should consider it. UPS's financial health and development prospects also show that the company has the ability to outperform in the market. It has a growth score right now As a result, UPS appears to be a good buy right now. After recent earnings, United Parcel Services Inc. on NYSE, its UPS, which bills itself as the world's largest package delivery company, is a buy. Following the presentation of its Q1 2022 results, UPS boosted its quarterly dividend and doubled its full-year share buyback objective. At the same time, the company also maintained its FY 2022 revenue growth and operating margin guidance. This reassures investors that UPS is on course to enhance its ROIC over time through revenue mix optimization and productivity measures. As a result, I believe UPS deserves a buy investment rating, and you should definitely go for it. The last stock we're going to be looking at today is the DKS stock. On Wednesday, May the 25th of 2022, the stock price of Dick's Sporting Goods Inc. increased by 9.69%, jumping from $71.24 to $78.14. The price fluctuated 28.13% throughout the day, from a low of 63.45 to a high of 81.3. For this time period, the price has been fluctuating with a minus 10.01% decline in the last 2 weeks. Volume has climbed in line with price over the last few days, indicating a strong technical sign, with 32 million more shares traded than the day before. A total of 39 million shares were purchased and sold for $3.01 billion. In the short term, the stock is in the middle of a very wide and downward trend, and further falls within the trend are expected. Given the present short-term trend, the stock is anticipated to lose minus 22.57% during the next 3 months, and with a 90% probability end the period with a price between $54.81 and $74.45. However, if the stock price remains at present lengths or rises, this predicted price will begin to change favorably during the next few days. At the current prediction, conditions will be broken. As a result, this is one to keep an eye on. Which of these stocks will you be buying? Let me know down in the comments section. And that's it for today's video. Thank you for taking the time to watch, and I'll see you in the next video. I hope that you've learned a thing or two. Don't forget to subscribe to my channel and press the bell icon so that you never miss an update. I really hope to see you again.